Crypto ETF inflows scale new heights, but are Bitcoin funds really a safe haven? This is Inside ETFs, and we're talking crypto. ETFs tracking crypto assets drew a record $5.95 billion of inflows globally last week, while Bitcoin itself just carries on rising after it pushed through the $125,000 barrier earlier this week. The rise mirrors the soaring price of gold, so is Bitcoin the new gold? David Nicholas is portfolio manager of X Funds. David, this trade seems to be getting crowded. Is this being driven by a loss of faith in traditional US assets?
Well, I think it's part of the story, and I think the other part is just the uncertainty here in the U.S., right? Obviously, we're in the midst of a government shutdown, and so you've got a little bit of uncertainty for investors. But I think you've got the government shutdown, but you also have a Fed that's cutting interest rates, and so I think the dollar is a big part of the story as well. When you lose faith in the value of the dollar, every cut in rates weakens the dollar. Investors look for places at stores of value. So I think it's why you see Bitcoin rallying. I think it's why you see gold rallying. If you remember back here in the US in April, during our whole tariff sell-off, what did well? S&P was down big, markets were down big. Bitcoin ended up 9% for the month of April. So this tells me that investors are looking at Bitcoin as really a safe haven asset. And this is bullish, I think, for the crypto sector as a whole.
So is crypto replacing the role that US Treasuries used to play in portfolios as a safe haven?
Well, there's always going to be a place for U.S. Treasuries, right, with pension funds, endowments that have large investments. But I think for retail investors, I think it is, and I think you're starting to see this idea that obviously inflation is under control, I believe, for the most part, and the risk with long-term Treasuries or Treasuries in general is, right, if rates are going to be higher in the future. I don't think that fear is in the marketplace today. But I think for retail, if you ask the average retail investor, hey, for safety, are you going to buy treasuries or are you going to buy Bitcoin? I think overwhelmingly, this is what we hear from investors, is they go to Bitcoin. And so I think there's this shift between retail and institutions where retail jumped on this trade first. And now you're seeing institutions come in. And so I think really the big market really is for institutions to continue buying Bitcoin as a hedge against whether inflation, devaluation of dollars, uncertainty as well.
So in this landscape, David, how do you pick a crypto ETF? Should you go single asset or pick one that tracks exchanges like Coinbase and Robinhood?
Yeah, there's so many great choices out there. And so if you want direct exposure, the great thing about here in the US with the SEC approving ETFs owning Bitcoins, I like the ETFs that own Bitcoin. So I'm not a big fan of owning Bitcoin directly, just given the security threats. There's a lot of other issues as well. I like the ETFs. And so HODL here in the US is VanEck, low cost, less than 25 basis points ETF. Also Block, so our own crypto ETF that we have, it marries both crypto, so 40% of the fund is Bitcoin, 10% is Ether, but the other 50%, and I think this is really important for our viewers, the other 50% is actually publicly traded companies that benefit from crypto doing well. Because the interesting thing is, as Bitcoin goes up, a lot of these names that have real revenue and real earnings are really a leveraged play on the price of Bitcoin. So you're right. You can buy Robinhood, you can buy Coinbase, but you can also look at some of the miners, right? Like Mara, like Riot. You can also look at some of the names that cross both Bitcoin and AI. So a name like Iron, which started out as a Bitcoin miner, well, it's a company out of Australia, but now they've also got into the AI infrastructure and energy space. So there's a lot of synergy between the two. But for me, I want to own Bitcoin, but I want to own the companies, the whole ecosystem of crypto. And you get that through the miners. You even get that through the chip makers like NVIDIA and Taiwan Semi as well. So for us, it's a broad approach, not just Bitcoin or Ether.
Do you recommend funds that track Bitcoin treasury companies like Strategy that leverage those holdings?
Yeah, so I do. So obviously, Bitmine is a treasury company that has done well. But what you're starting to see is the premium of the net asset value, or the premium of the share price over the net asset value is coming down a lot. And so I tell investors to be careful, right? There was all excitement around MicroStrategies when it started out, but if you look at it, that spread has gotten thinner and thinner. What I don't want is common shareholders holding the bag. And so I think you have to be smart about that. but I do like having exposure to names like MicroStrategy and BitMine just relative to you can get a little bit of a premium over the price of Bitcoin.
You mentioned it though, but isn't it a risk that some of these companies have leveraged their holdings to issue stock that's worth so much more than their actual Bitcoin holdings?
Yeah, and that's the danger. And the other thing is I don't think retail really understands. Every time MicroStrategies issue shares, they're issuing common shares that retail buys, but then they're also issuing preferred shares that the institutions buy. And so the institutions are covered by the assets of Bitcoin. The retail investors, if the price of Bitcoin drops, are the ones holding the bag. So I always caution investors, the bets on these treasury companies only work as long as the underlying holding prices stay high. If we get a significant sell-off in Bitcoin or Ether, that could be pretty rough for retail investors. So you just got to be careful with these treasury companies.
That was David Nicholas of X Funds. Don't forget, you can watch more videos on Reuters.com.